Hello, this is Ernest Burley Jr., your certified financial planner, your chartered financial consultant, your NFLPA registered player financial advisor, your investment advisor representative. I hold the Series 6, 63, and 7 that allow me to offer securities products to clients across the country. Also, your author of 2 books on Money Management Easy as 1, 2, 3, and Money Management from Grade School to Grad School. These books are being used across the country to teach financial planning principles, money management principles, and also insurance concepts to youth, children, and adults. So it covers the spectrum. So different organizations in different states are using those books. So please go to Amazon, order them by the box load, and teach your organization too. There's actually a local church teaching financial principles from a like a financial freedom type class. Some principles out of that book. So, and it's a pretty large church. So I ask that you do it for your church, your family, your friends, buy those books and sell them out. They're all on Amazon, go sell them out. And I appreciate those who've already done that. And I appreciate those who will be doing that going forward. I'm also a licensed insurance agent with over, how many years now? Over 25 years in business and over 30 years experience in the insurance industry. So I've been out there quite a bit of time, seen a lot. I help clients all over the country. I have clients from the north to the south, from the east to the west, all over the country. So I love being able to do that, helping clients in various arenas. I specialize in wealth management, investing, so like IRAs, 401k plans, investment portfolios, things of that nature, in addition to asset protection, so protecting what you've accumulated, and asset growth, so strategically trying to grow what you have so far, as well as financial planning. So whether it be comprehensive financial planning or just basic financial planning and consulting, I do both of those for clients and businesses and organizations. All different types of insurance also. So whether it be life insurance, long-term care insurance, auto, home, business, church, contractor, professional liability, boats, rental properties. We do all different types of insurance for clients to protect their assets, right? And also athlete management. So on the NFL side, I'm an NFLPA registered player financial advisor. On the NBA side, I'm an NBPA certified player agent. So I can get your guy some opportunities. I have some people sending me some film. We'll see what pans out there, but got to be really good to make it in the NBA. But if you think you have the goods, or your child has the goods, send me their highlight tape and some stats on them, and I'll see what I can do for them. Okay. All right. So the purpose of this podcast is to educate, to enlighten, and to empower you with clear, objective, unbiased information to help you make the right decisions so you can make some good decisions for yourself, for your family, your church members, your co-workers, help whomever you're connected to make some good decisions for themselves and for those that they are connected to. So that's the purpose of the podcast, right? So here we go. Today's podcast is titled Long-Term Care Insurance Revisited. Now, I did a podcast on this, but it was well over a year ago on long-term care insurance, the reason why you should have it, the benefits and things of that nature. So I'm not gonna go over that again. I'm not gonna do it again. But I've been getting some inquiries about long-term care insurance and that type of protection over the past few months here. So I said, well, maybe I need to revisit this topic. So here's the thing with long-term care insurance. You got to think ahead. You want to think ahead to provide some security and safety and stability, some type of situation where you have taken precautions for this type of situation if it arises, instead of having family members scramble to look for money or to look for some type of way to take care of you if something unfortunate comes down this alley, such as long-term care coverage, which is basically custodial coverage. So plan for, that's what planning is all about, right? Insurance planning, financial planning is about planning and putting yourself and your family in the best position possible, based on, what could possibly happen, right? So secure the protection while you're in good health. Don't wait until you're in your 50s, 60s, or older to get this type of coverage. Get it in your 30s and 40s. I know it sounds kind of odd to think about long-term care coverage needs at age 30 or age 40, but a lot of people in those ages have seen their parents or grandparents need this type of service, so they are very familiar with it. A lot of people have not. So I can understand not thinking about long-term care coverage or protection at that age, but that's the age to get it because you're very young. Normally you're in good health. And that's when you want to do it because you're not going to get younger. You're going to get older, right? And nine times, I shouldn't say nine times the same, but a lot of times your health is not going to be as good as it was when you were younger. So let's think about that now. Let's plan for it now. Get the very economical premium right now, the best premium you're going to get because you're at your youngest age now, as opposed to next year and 2 years and 5 years on down the line. Okay. I have clients now that they're in their 50s and 60s. They wish they would have gotten the plan back in their 30s and 40s because of the premium right now. So let's do things that are towards our advantage. Okay. So here I want to jump into the two key ways to secure this type of protection. You can either get a standalone long-term care policy, right? Which means it's just a long-term care policy, and that's what it's focused on. It doesn't have anything else that it's attributed to, just long-term care protection. It gives you a monthly benefit or a daily benefit for those types of services, right? Or you can get a life insurance policy with a long-term care rider attached to it. Now, the cost varies depending on the age of the person, depending on the health of the person, and depending on what type of benefit they want. So sometimes it makes sense for a person to have a standalone long-term care policy. Like now, as a matter of fact, I'm working with a couple now that they want that protection, and I've compared the two: long-term care policy standalone versus long-term care versus life insurance policy with long-term care rider. And in this case, the long-term care policy, the standalone policy, is more economical for them, more cost-effective for them to get that policy, as opposed to a life insurance policy with the rider attached to it. But I've seen many people in the past, it's a more economical or cost-effective way for them to get the coverage is to get a life insurance policy with a long-term care rider attached to it. So it depends. Make sure whoever you talk to compares the two to see which is in your best interest, okay? Because sometimes one costs less than the other, and that's the one you want to go with if it's going to cover your need, which you want it to take care of, which is long-term care services. Now, here's a big caveat. If you get life insurance with a long-term care rider, you want to make sure that life insurance policy is a permanent life insurance policy. You don't want to outlive your policy. You don't want your policy to expire, so your life insurance is gone and your long-term care protection is gone. Don't do that. So make sure it's a permanent policy. And I have podcasts on the different types of permanent policies out there. Let's make sure you don't outlive it. The policy is going to outlive you. It's going to be there at 100, 110, or what have you. You don't want it conking out at age 75 or 80 when chances are you'll probably still be around then. So you want your policy to be very much in force. So make sure you get a permanent policy if you get life insurance with a long-term care rider. And that's pretty much it for today's podcast. To readdress it, to mention these two main avenues to get that protection, and to do it sooner than later because of age and health, right? Those are the two big reasons why you want to do it sooner than later. I'm going to run down some reasons to get the coverage, but I'm not going to go into detail. If you want to look at that podcast, go to my YouTube channel and you can pull up the long-term care podcast where I was talking about the different reasons. So here's one big reason. This is a big gap that I see in people's insurance planning or financial planning, whatever you want to call it, because the cost of long-term care services, I mean, it could be $80,000, $100,000 a year, and that can really pummel your assets, right? So that's one big reason. The second reason is it helps you maintain some control of how you're being cared for, and also to control your assets, right? Another big reason is if you can't do two of what they call 6 activities of daily living, ADLs, or if you have one cognitive impairment like dementia or Alzheimer's, it will kick in. No, it's called ADLs, activities of daily living. When 2 of those, you can't do 2 of those, and I'm not going to get into the details. Like I said before, check out the other podcast. It will trigger the policy, right? Now, some people think that Medicare pays for it. It does not. So take a look at our previous podcast. Medicaid will, but you have to be at the poverty level for Medicaid to kick in. Here's another tidbit that I covered in the other podcast. Long-term care partnership. You want to make sure your policy is a partnership qualified policy, and go take a look at my previous podcast for that. And last but not least, hey, your premiums may be deductible. So because the older you are, you get a bigger amount of premiums that you can deduct on your tax, your income taxes possibly, right? So it depends on how much you have in medical expenses and all that kind of stuff. So you can speak with your accountant about that. And that's today's podcast. Real simple, right? Long-term care insurance revisited, very important. I have several people that have asked about that. So I said, let me talk about this again really quickly on my next podcast. Okay. Because the last time I spoke about this was over a year ago, right? All right, so that's it. The takeaway or the recap for today's podcast is to make sure that you get the coverage sooner than later. That's basically the recap. Okay, recap, get the coverage sooner than later because you're younger now. You're not going to get any younger. You're going to get older, right? And you're probably in the better health now than you're going to be in 5, 10, 20 years when you're 50, 60, 70 years old. The cost is going to be much different than it is for you in your 30s and 40s. Okay, the takeaway, do it now. I'm just going to recap it. It's the same as the recap. Just do it now because it's very important for you. And you're providing some security, stability, some planning, future planning for your family and friends or whoever will be responsible for you if you need that type of care, which, we all know is kind of prevalent that something like that is required for a lot of people when they get to certain ages. Okay. Okay, now I want to thank you guys for listening. I appreciate you listening in every week. I appreciate you. I've asked that you please forward this podcast to your friends, your family members, your church members, your coworkers, your employers, everyone across the country, everyone across the world, because the internet is worldwide, right? So please forward the podcast to them and ask them to do the same so these podcasts can go viral. All of my podcasts are on my YouTube channel. So just look up Ernest Burley Jr. So it's just my name, Ernest Burley Jr. and subscribe. So please subscribe. I thank you for all you guys who've already subscribed. And thank you for those who are encouraging other people to subscribe, continue to get more and more subscribers. So I ask that you subscribe and then click around in there. You'll see podcasts on a whole wide array of topics, including long-term care. We talked about that today. Real estate or real mistake. I talk about mortgages. I talk about whether you should pay your mortgage off early or not, whether you should buy a car or lease a car, how you can increase your credit score. I talk about beneficiaries versus wills and trusts, all different types of things on there. Okay, so please go to my YouTube channel, forward that YouTube channel to others, subscribe and click around in there for some podcasts that you like or some little quick, I have some 1-minute tidbits in there too. All right. If you want to connect with me, very easy to do. It's just my email address is my first name at my full name.com. So Ernest at ernestburleyjr.com. Or you can go to my website and connect with me there. My website is just my name, ernestburley.com or ernestburleyjr.com, whichever you prefer. And I have a lot of good videos and information on my website that I think you find interesting. You can reach out to me through my website, or you can call my firm, which is 301-262-2600. Just give me a call and I'll be glad to speak with you, okay? Now, since I spoke about financial planning, me being a financial advisor, investment advisor, representative, certified financial planner, all that good stuff, I have to put my disclaimer out there. So here we go. Burley Insurance and Financial Services, Inc., 13621 Annapolis Road in Bowie, Maryland, 20720. That's where my firm is located, even though I have clients all over the country. I even have some clients out of the country, but they're temporarily out of the country. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr., moi, and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. And that's it for today's podcast. Hope you got some good information out of it. Good revisit from a previous podcast, but just a little bit tweaking to it. In the meantime, hey, y'all be safe out there. Y'all take care, and we'll see you next time. Okay, take care.